Good day Forex trader. Your USD Forex signal, Euro to retest 1.0800 ahead of ECB. There is a likelihood that the pair will resume the bearish trend and retest the lower side of the descending channel at 1.0800. Bearish view. Sell the Euro USD pair and set a take profit at 1.0800. Add a stop loss at 1.0950. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.0910 and a take profit at 1.100. Add a stop loss at 1.0850. The Euro USD price crawled back as investors waited for the upcoming interest rate decision by the European Central Bank, ECB. The pair rose to a high of 1.0877, which was above this week's low of 1.0890. ECB interest rate preview. The ECB will conclude its two-day meeting on Thursday and deliver the highly anticipated interest rate decision. The decision comes at a time when global bond yields have risen to the highest levels in a few years. It also comes after mixed economic data from Germany. Data published by Eurostat showed that the bloc's unemployment rate has crashed to an all-time low, signaling that the labor market is strong. On the other hand, data shows that the Eurozone inflation has risen to the highest levels in decades. And this trend will continue the longer the crisis in Ukraine continues. Other numbers show that the manufacturing sector is seeing an impact of supply shortages and high cost of doing business. Business and consumer sentiment has also dropped. Therefore, analysts expect that the ECB will deliver a relatively cautious statement. The base case is that the bank will leave interest rates unchanged and then signal that it will start moving later this year. Also, it will likely hint that it will be data dependent when it comes to raising interest rates and implementing its QT program. The ECB decision comes at a time when other central banks have become significantly hawkish. On Wednesday, the Canadian and New Zealand central banks delivered strong rate hikes. The Fed has also hinted that it will continue hiking rates. The Euro-USD pair will also react to the latest U.S. retail sales and initial jobless claims numbers. Economists expect that these numbers will show that retail sales rose by 0.6% in March while core sales rose by 1% even as inflation rose. Euro-USD forecast. The Euro-USD pair rose in the overnight session. On the 3-hour chart, it is approaching the upper side of the descending channel shown in purple. It also moved slightly above the 25-period and 50-period moving averages while the MACD moved above the neutral level. It also retested the important resistance level that was the lowest level on March 11. Therefore, there is a likelihood that the pair will resume the bearish trend and retest the lower side of the descending channel at 1.0800. GBP USD Forex signal, does sterling comeback have legs? The pair will likely keep rising as bulls target the next resistance at 1.3200. Bullish view. Buy the GBP USD and set a take profit at 1.3200. Add a stop loss at 1.300. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3045 and a take profit at 1.2973. Add a stop loss at 1.3125. The GBP USD pair staged a recovery during the American session as the strong US dollar rally took a breather. The pair rose to a high of 1.3100, which was the highest level it has been since April 7. US retail sales ahead. The GBP USD pair has been in the spotlight this week because of the important economic numbers published by the Office of National Statistics, ONS. On Monday, the ONS published mixed economic data that showed that the UK economy had a mild economic growth in February. The economy grew by just 0.1% after growing by 0.8% in the previous month. The country's manufacturing and industrial production numbers also declined. On Tuesday, the ONS published strong jobs numbers. The data showed that the country's unemployment rate declined to 3.8% in the 3 months to February. They returned to where they were before the pandemic started. The number of job openings jumped to a record high of 1.29 million. On Wednesday, the ONS published strong consumer and producer inflation data. The headline Consumer Price Index, CPI, rose from 6.2% to 7%, while core CPI jumped from 5.2% to 5.7%. The ONS warned that the country's inflation will likely hit 10% this year. The next key catalyst for the GBP-USD pair will be the latest U.S. retail sales numbers. Economists expect the data to show that the country's retail sales rose by 0.6% in March, while core sales rose by 1% in the same period. If analysts are accurate, these numbers will signal that retail sales did well even as consumer prices soared. Still, these numbers will likely not change the decision of the Fed. In a statement on Wednesday, James Bullard said that the bank should be aggressive when it comes to tightening. He said, "Getting to neutral isn't going to be enough, it doesn't look like, because while some of the inflation may moderate naturally, there will be a component of it which won't." GBP-USD forecast. The GBP-USD pair dropped to the important support level at 1.300 this week. This was a notable level since it was also the lowest it has been since March 14. The pair then rebounded as investors waited for the upcoming U.S. retail sales data. It also managed to move above the descending trend line shown in black. Therefore, the pair will likely keep rising as bulls target the next resistance at 1.3200. A drop below the support at 1.3000 will mean that there are still more sellers in the market. AUD/USD Forex signal, brief rebound likely as pressure mounts on RBA. The sharp decline will likely take a breather in the coming days. Bullish view. Buy the AUD/USD and set a take profit at 0.7495. Add a stop loss at 0.7390. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7400 and a take profit at 0.7300. Add a stop loss at 0.7500. The AUD-USD pair attempted to recover after the surprise interest rate decisions by the Reserve Bank of New Zealand, RBNZ, and Bank of Canada, BOC. The pair is trading at 0.7440, which is a few points above this week's low of 0.7395. More pressure on RBA. This month, the Reserve Bank of Australia hinted that it will start hiking interest rates in June this year. In the statement, the bank hinted that it was starting to lose patience with its inflation target. The bank could now come under pressure from other central banks. For example, the Fed has started hiking interest rates and has hinted that it will become more aggressive in the coming months. Analysts expect that the bank will deliver about 6 more hikes this year. On Wednesday, the RBNZ caught many analysts by surprise when it delivered a bigger hike than expected. It pushed its benchmark interest rate to 1.5% from the previous 1% in its biggest rate hike in 22 years. The BOC also decided to hike interest rates by another 0.5%. Similarly, the BO has already delivered 3 rate hikes since December last year. Therefore, analysts believe that the RBA will also become more aggressive in the coming months. The AUD/USD pair is also reacting to the latest jobs numbers. According to the statistics agency, the country's unemployment rate remained at 4% in March. This performance was worse than the median estimate of 3.9%. The economy added 17.9k jobs in March after it added another 77k job in the previous month. The pair will next react to the latest retail sales and export and import price index data from the United States. AUD-USD forecast. The AUD-USD pair declined to a low of 0.7400 this week. A closer look shows that it formed a small double bottom pattern in this level. On the 4-hour chart, the pair is trading at an important level since it was its highest point on March 7. It is also slightly below the 25-day and 50-day moving averages, while the MACD has formed a bullish crossover pattern. Therefore, the sharp decline will likely take a breather in the coming days. If this happens, the next key resistance will be at 0.7495.